Crypto Pirates Daily News, February 10, 2022. News headlines. Today in FinTech, rumors of an iPhone payment terminal come true. What are the benefits of fan tokens and NFTs in the sports industry? These reasons have resulted in an increase in the link between BTC and ETH and the stock market. Money for nothing, Citi's crypto push attracts supporters and detractors. China has a cryptocurrency dual language and has launched the digital yuan. Is it too late to invest in Bitcoin? Wells Fargo offers 3 tips for new crypto investors. Bitfinex hackers arrested 6 years later for stolen $60 million from crypto exchange. Ireland declares that retail funds will not be available for the crypto market. Wells Fargo, a banking behemoth, is bullish on Bitcoin, predicting that crypto adoption will skyrocket. Police in Spain apprehend a narco-trafficking ring that was using cryptocurrency to launder money. Today in FinTech, rumors of an iPhone payment terminal come true. Following Happy Money's latest funding round, big investments gave small firms supersized valuations and even birth to Happy New Unicorn. Go Cardless received $312 million in funding, while HubPay received $20 million in its first post-seed round. On the FinTech front, merchants will soon be able to forego POS hardware in favor of using their iPhones, and Challenger Bank Customers Bank has formed a special banking group to serve securities brokers and a variety of other new industries. Apple confirms iPhone contactless payment plans for merchants. The rumor mill can sometimes produce some truth, as was the case with Apple's latest venture for merchants, a no-hardware, contactless, point-of-sale payments terminal that uses something most people have on hand, an iPhone. Customers and merchants simply point their iPhones at each other in an air kiss, and the payment process is complete. Customers can use their digital wallet, Apple Pay, or virtual debit and credit cards to make payments. FinTech clients bank forms financial institutions banking group. Customers Bank, headquartered in the small Pennsylvania borough of Phoenixville, is thinking big and outside the digital-only box. The 12-year-old bank, which has 12 branches and 10 loan offices in Florida, Illinois, Massachusetts, New Hampshire, New Jersey, New York, Pennsylvania, Rhode Island, and Texas, has its sights set on serving securities brokers and much more. To begin that journey, it formed a Financial Institutions Group, FIG, to launch the broker-dealer banking group, which will serve clients with $100 million to $1 billion in assets. The bank previously announced the formation of 3 new groups, the Funds Finance Group, the Technology and Venture Banking Group, and Customers Bank Instant Tokens, a blockchain-based real-time payment system for cryptocurrency and digital asset institutions, CBIT. Happy Money, a lending platform, is valued at $1.1 billion. Happy Money is clapping its hands and galloping to the bank after achieving unicorn status thanks to a $50 million Series D1 funding round. Happy Money, which provides unsecured loan assistance in collaboration with credit unions, was founded in Tustin, California in 2009. By the end of last year, the platform had helped to make nearly 205,000 members happy by collaborating with lending partners to fund $3.7 billion in loans. HubPay raises $20 million and debuts cross-border digital wallet. Following its initial seed round, fintech HubPay, which works with the Middle East and North Africa, raised its first round of funding. Signal Peak Ventures led its $20 million series of funding round. HubPay, the first startup licensed in the UAE for digital money services, intends to use the new funding to expand its talent team and continue its global expansion, beginning with a stronger presence in Africa and Asia. Dubai, Abu Dhabi, Karachi, and London are among the locations where the company has offices. After Series G, Go Cardless is valued at $2.1 billion. Following its $312 million Series G funding round, Go Cardless now has a $2.1 billion valuation. Go Cardless, the latest tech unicorn in Europe and the United Kingdom, works with over 70,000 businesses worldwide, including Epson, TripAdvisor, and DocuSign. The fintech is one of the leading direct bank payment solutions, and it intends to use the new funding to accelerate its growth in the open banking space by launching new products and expanding into new markets. What are the benefits of fan tokens and NFTs in the sports industry? Sport clubs will be administered differently as a result of fan tokens and NFTs. The sports sector has realized the potential for cryptocurrencies to improve commercialization. There's never been a greater ally for increasing fan engagement and getting sponsors on a global basis. The sports industry has developed new tactics in response to the COVID-19 epidemic's limits. As a result, you will learn more about how crypto sponsors and fan tokens are assisting sports clubs in this article. In Formula One and Major League Baseball, there are crypto sponsors. When BitPay struck a sponsorship arrangement with ESPN Events in December 2014, the idea of crypto sponsoring sports was born. Crypto.com is currently the best example of cryptocurrency sponsorship in sports. Formula One has negotiated a $100 million sponsorship deal with them. It's the company's second deal since the one with the Ultimate Fighting Championship, UFC. Crypto.com has collaborations with a variety of sports teams in addition to the UFC and Formula One. These include: the Canadiens are a National Hockey League (NHL) team. Formula One team Aston Martin Racing. FTX, on the other side, has been active in sports collaborations. It was the first cryptocurrency exchange to strike a multi-year sponsorship deal with Major League Baseball, MLB. The seal has a value of $210 million. They also secured a 19-year deal with Miami-Dade County for the NBA's Miami Heat name rights. What are the ways that fan tokens are embracing fans all over the world? Fan tokens are digital assets that allow sports teams, leagues, clubs, organizations, and athletes to communicate with their fans more effectively. It is especially beneficial for teams to keep in touch with supporters all over the world who are unable to interact with their teams personally. As a result, the magic of a fan token is that it transforms a passive supporter into an active one. In addition, how many supporters value membership in the club/team and collecting unique prizes determines the value of fan tokens. Users can also vote on a range of decisions after accumulating a certain number of fan tokens. Supporters can vote on a club's merch design, tour bus designs, ticketing, match locations, and MVP categories, among other things. Unlike NFTs, these tokens are fungible and can be swapped for future products. The demand for these tokens will increase if the club improves the utility of these sports tokens or wins a league. Tokens for Chiliz fans. Chiliz was the first and most well-known fan token, spawning a slew of new ones, including Token for Barcelona fans, Token for Manchester City fans, Token for AC Milan fans, Token for Juventus fans, among others, Paris Saint-Germain. Furthermore, Lionel Messi's transfer from FC Barcelona to PSG demonstrates that fan tokens are more than just a collectible or a commodity. As part of his signing bonus, Messi gets a piece of the PSG fan tokens. The value of the PSG fan tokens might soar if PSG wins the Champions League in the future, potentially giving Messi control over his income. Sports and NFTs. Sports media NFTs are expected to generate more than $2 billion in transactions by 2022, according to a Deloitte analysis. It's roughly double the number from the previous year. According to the survey, the most popular and profitable application of NFTs in the sports industry will be the sale of limited edition video clips of athletic moments or player cards. As a result, the popularity of the athlete, the significance of the event, any additional information contained in the NFT, and demand will decide the worth of each NFT. We'll now go over one of the most essential platforms for bringing NFTs into sports. NFT sports trading platform Sportman Go. Sportman Go is the most popular tokenized sports platform in the world. Sportman Go is the market leader at the intersection of four multi-billion-dollar industries: blockchain tokenized sports, non-fungible tokens, the metaverse, and betting. Users would be able to hunt down and collect NFTs of their favorite athletes in Sportman Go. The goal is to transform the gaming and non-financial transaction (NFT) collection businesses. Participants will also be able to interact in unprecedented ways at stadiums and sporting events. Furthermore, SGOX, a BEP20 token, is the sole source of funding for this company. The platform's whole economy will be powered by this native coin. It will also allow gamers to purchase NFT stuff, create their ultimate team, participate in minigames, win rewards, and much more. These reasons have resulted in an increase in the link between BTC and ETH and the stock market. Going popular is not always the greatest course of action for assets, as cryptocurrencies demonstrate. While increased use has undoubtedly increased the market's credibility and capital, it has also made it more subject to macroeconomic shocks. Cryptocurrency is stockpiling. This is demonstrated by the increasing link between Bitcoin and the US stock market, which has been a source of concern for analysts for several years. This trend was accelerated last month by the US Federal Reserve's hawkish posture and inflation reporting, which drove both markets into freefall. Now, as both asset classes enter a period of stability, these anxieties have been resurrected, all the more so given the Fed's upcoming comments. A positive association between equities and cryptocurrency was first seen in 2018, when similar Fed tapering destroyed both markets. While stocks lost about 20% in the fourth quarter of 2018, Bitcoin lost up to 50%. Regardless of how worrying the trend was earlier in the year, its unprecedented acceleration since August 2021 has left many in a daze. Bitcoin has lost 13% versus the dollar in the last month, while the S&P has lost 10%, demonstrating that the divide between the two is shrinking with each crash. Martin Green, CEO of Cambrian Asset Management, stated the same thing in a recent Forbes interview, noting that while the Bitcoin Nasdaq correlation was 0.2 during the last 3 years, it has doubled to approximately 0.4 in the last 6 weeks, he continued. The link is stronger today than it was 6 months ago. I would argue that Bitcoin and tech stocks have been moving in lockstep recently along both axes, up and down, as a result of rising interest rates and inflation concerns affecting both stocks and crypto. No longer a safe haven. As the International Monetary Fund, IMF, recently noted, cryptocurrency and technology stocks rising in lockstep might create numerous obstacles for global finance. Among these is the risk of contagion, which occurs when investor emotion spreads across markets. There is also a spillover effect across crypto assets, as the correlation between the second largest cryptocurrency, Ether, and the S&P 500 has surpassed record highs. This has eroded BTC's narrative of being a safe haven asset comparable to, if not superior to, gold. This was a significant factor in the organization's early success, ChangeNow spokesperson Mike Ermolaev claimed in the same interview. He stated that while macroeconomic conditions played a role in BTC's economic history, its mainstream adoption by institutional investors may have played a role as well. While withdrawals from Bitcoin investment products have just reached a record high, the broader investment community has grown increasingly positive on the young commodity. While this has given the industry respectability, it may also lead to money managers treating the asset similarly to traditional technology companies, so increasing the correlation. Over the last few years, there has been a significant amount of money moving into crypto from traditional markets. Traditional markets and cryptocurrency marketplaces have converged throughout that time period. Numerous evidence indicate that tech equities and Bitcoin are currently highly connected. Fortunately, there is a silver lining to the upheaval, as Bitcoin and Ether's following of the traditional stock market could result in a boom in their prices whenever the stock market recovers. Additionally, the increase in institutional interest and long-term holdings indicates that the market is maturing and diminishing its risk component. Tracking Bitcoin against the S&P or the Nasdaq could bolster this story even more. Money for nothing, Citi's crypto push attracts supporters and detractors. A small group of cryptocurrency enthusiasts has made an offer that they hope cities in the United States will be unable to refuse. The organization Citicoins is requesting that Miami and New York accept the equivalent of millions of dollars in a new cryptocurrency, and at least some of the money is real. Miami Mayor Francis Suarez announced last week that the city had received $5.25 million from Citicoins. The dizzying proposal has leaders in other cities, such as Philadelphia and Dearborn, Michigan, clamoring to get in on a deal they hope will patch budgets, similar to how some cities and states hoped lotteries or legalized gambling would solve financial problems. That hype also benefits those who invest early in new currencies, which contributes to claims that cryptocurrency startups are too similar to pyramid schemes. When Suarez announced his city's partnership with the group in November, one of its leaders, Patrick Stanley, told news outlet and cryptocurrency price index company CoinDesk TV that Suarez just turned his city into an oil-producing country that gives Bitcoin yield to its citizens, which is incredible. That hasn't happened, and there are many legal and technological hurdles to overcome before it can. To begin with, the value of cryptocurrencies can fluctuate greatly. Between November and the end of January, the popular cryptocurrency Bitcoin lost nearly half its value, falling from a peak of $67,500 to just above $35,000. It has since recovered slightly to around $43,000. Cryptocurrencies are also popular among criminals due to their anonymity. Scams abound in the world of cryptocurrency trading. The proposal by the group builds on the blockchain technology that underpins Bitcoin and other cryptocurrencies. People who want to support the city of Miami can invest in Miami Coin, as can anyone else, with a portion of their money going to the city. The remainder is divided among Miami Coin's other investors. The system is set up in such a way that those who make larger investments and get in early are favored. If everything goes as planned, the new cryptocurrency's price will rise, and the city will receive free money. Participants in the City Coins project hope that Miami residents will eventually be able to use the blockchain technology Miami Coin is built on to hold their identification, pay taxes, or vote, increasing the coin's value. City Coin's contract with Miami makes no mention of any of these possibilities. The proposed arrangement is also unusual in terms of economic development, in part because City Coins claims to be a kind of collective rather than a company. Aside from a link to the messaging app Discord, its website contains no employees or contact information. It is a non-profit organization registered in Delaware. According to online records, it is not registered in Florida. When reached on Discord, community lead Andre Serrano estimated that the number of people involved in CityCoins ranges between 10,000 and 15,000, based on CityCoins Twitter followers and those who have joined the Discord chat. Suarez stated in a statement that the city cannot legally hold cryptocurrencies. So, for the time being, he said, CityCoins acts as a custodian of Miami's rewards until they are converted into dollars and formally gifted to the city, the first $5.25 million of which was given to the city on February 2nd. In terms of scale, the city of Miami's operating budget was more than $1.3 billion when it was adopted in October. We have a lot of ideas for how we can spend the money, and we fully intend to listen to the community's input on how to deploy the funds, Suarez said in a statement, implying that education would be a priority. According to John Foer, a research professor at George Washington University's Public Policy School, the unprecedented agreement poses potential pitfalls for any municipality that participates. There's so much uncertainty and it's so new. Are you sure you've investigated all of the risks and that you have a way of dealing with them whatever they are? He asked, adding that it's critical the city can hold the outside party accountable if necessary. Stanley is listed as the point of contact in the contract City Coins signed with the Miami, with an address in a Los Angeles strip mall. He has appeared in interviews about Miami Coin alongside Suarez, where he is identified as the community lead for City Coins. He did not respond to questions about the City Coins structure and organization. Stanley has previously stated in public that he worked with Stacks, the cryptocurrency ecosystem on which City Coins is based. Cities may want to consider blockchain technology to increase financial transparency, according to Liat Shetrat, Director of Regulatory Affairs and Compliance Policy at risk analysis firm Solidus Labs. She is concerned, however, that politicians are promoting cryptocurrencies as a gimmick rather than preparing their cities to deal with new issues such as money laundering. Because of the nature of the blockchain, while it is possible to see which accounts own Miami Coin or are mining it, the true identities of those people are not publicly visible. Currency exchanges request basic information like names, addresses, and social security numbers. It's unclear how much identifying information coin creators collect. Participants are not required to be Miami residents. Neither Suarez's office, Stanley, nor the Stacks Foundation responded to questions about whether they had access to the personal information of Miami Coin participants or if they were concerned about the participants' anonymity. It's critical to keep bad actors off of these platforms, Shetrat said. While New York City Mayor Eric Adams has been a supporter of cryptocurrencies, his administration has yet to sign on to the project, despite the November launch of a New York City coin. Adams' office did not respond to questions about whether the mayor was considering accepting Citicoin's funds. Residents of New York are currently unable to purchase the New York coin because the loan exchange offering it is not licensed in the state. "We're optimistic that it'll be approved by mid-year," said Larissa Bunziak, a spokesperson for the exchange OKCoin, which began selling the New York coin to non-New Yorkers on January 26. Last week, some Citicoin's participants expressed dissatisfaction with the experiment's progress and debated whether the group should launch cryptocurrencies in new cities or wait for the value of the coins in Miami and New York to prove themselves more. "It's simple to get a city to claim free money," one participant wrote. "It takes more than that to actually provide value, so that there are good reasons for people to participate in the long run." Randall Chase of the Associated Press in Dover, Delaware, contributed to this report. China has a cryptocurrency dual language and has launched the digital yuan. The introduction of the eCNY is the latest chapter in China's tumultuous relationship with cryptocurrency. As athletes from all over the world descend on Beijing for the Winter Olympics, China used the occasion to launch the digital yuan. The introduction of the eCNY is the latest chapter in China's tumultuous relationship with cryptocurrency. In June 2021, Chinese officials renewed their crackdown on the cryptocurrency industry, ordering crypto miners to cease operations in China's Sichuan province, which was once one of the country's largest mining centers. Advantages of first mover. China's central bank released pilot versions of its digital yuan wallet application in early January, as the country ramps up efforts to develop its official digital currency. Senator Pat Toomey of Pennsylvania expressed concern about the digital yuan. Toomey stated in a letter to Treasury Secretary Janet Yellen and Secretary of State Antony Blinken that analysts have raised the potential CNYs to undermine U.S. sanctions, facilitate illicit money flows, enhance China's surveillance capabilities, and provide Beijing with first-mover advantages, such as setting standards in cross-border digital payments. China's crackdown provides an opportunity for the United States to be a forerunner in crypto innovation, grounded in individual freedom and other American and democratic principles, Toomey added. In terms of what's going on in the real world, Wall Street Journal reporter Liza Lin tweeted, "I haven't seen anyone use the digital currency yet." Although China has cracked down on the crypto industry, prohibiting the mining and use of Bitcoin as a form of payment, Tammy DaCosta, analyst at Daily FX, stated that digital yuan allows regulators and the government to trace all payments made without the need for banks or other financial intermediaries. A danger to global regulators. With global central banks now following suit, DaCosta said, Bitcoin continues to pose a threat to global regulators eager to improve the transparency of blockchain transactions. However, with stricter regulations now in place, the original cryptocurrency may be able to coexist with digital currencies. The yuan is already one of the world's largest and most dominant currencies, said Keegan Francis, Finder's Bitcoin and crypto specialist. Creating a digital version will allow for greater accessibility, scalability, and efficiency when compared to government currencies that do not have a digital version. While most currencies are already digital, Francis claims that they are not part of a central bank digital currency, or CBDC system. A CBDC is a single ledger controlled and operated by the respective country's central bank, he explained. The CBDC that China is constructing is distinguished by the fact that all instances of digital yuan are subject to centralized control. This means that individual accounts can easily be frozen, payments to specific destinations can be censored, and every transaction may be tracked to enhance the profile of Chinese citizens within the already established social credit system, according to Francis. Some of these new features contradict the development that has occurred within the world of cryptocurrency, he said. Bitcoin transactions, on the other hand, cannot be stopped, addresses cannot be frozen, and all transactions are permanent. Follow in the footsteps of China. According to Francis, the implementation of a CBDC becomes an attack vector for cryptocurrencies because the central bank can now stop transactions wherein citizens wish to acquire cryptocurrency. Having said that, the implementation of more authoritarian-style CBDCs creates an opposing demand for money that is more representative of freedom, he continued. The adoption and mandatory use of CBDCs may have the opposite effect on cryptocurrencies. Instead of limiting their growth, it may draw attention to the importance of cryptocurrencies such as Bitcoin. Valentina Drofa, founder and CEO of Drofa Calms, stated that it is obvious that the ban imposed on Bitcoin by Chinese authorities aided the successful trials for the digital yuan project. While many countries are developing their own CBDCs, with a few having launched theirs, China remains the largest economy that has made significant progress, and the Olympic Games debut justifies the country's ban on Bitcoin and all things crypto in the past year, she said. By implication, other regulators may want to follow in China's footsteps, as cryptocurrency's popularity will always pose a threat to established sovereign monetary systems. While China serves as an example for many other countries, Drofa believes that those who choose to regulate crypto in order to coexist with fiat and CBDC have a tendency to have a more robust and competitive financial landscape. Is it too late to invest in Bitcoin? Wells Fargo offers 3 tips for new crypto investors. Wells Fargo, headquartered in the United States, has 3 recommendations for new crypto asset investors, with a recent report released by the bank's Investment Institute answering the question that many people have: is it too early or too late to jump on the crypto train? The authors of the report advise new crypto investors to be patient, prudent, and cautious. Please be patient. According to the analysis, there is no need to rush into crypto investments because the majority of the opportunity is already in front of investors. In its assessment of the too late to invest argument, the study cites Bitcoin's price compounding at a 216% annual rate since the cryptocurrency's first recorded transaction in 2010. In comparison, the total return of the S&P 500 index has compounded at a rate of 16% per year over the same time period. We understand but do not subscribe to the too late to invest argument, the Institute said. We believe that focusing too much on past performance, particularly in the case of cryptocurrencies, can be deceptive to new investors. Performance figures are skewed because most cryptocurrencies started from almost nothing. Be cautious. The authors believe that crypto assets are in an early, but not too early investment stage, which is why they emphasize the importance of investor education, as investment options lag and continue to mature. The authors then compared 3 major ways to gain exposure to cryptocurrency. Acquiring cryptocurrency from an exchange. Mutual funds, exchange-traded funds, ETFs, backed by crypto, and grantor trusts. Personal placements. The analysts concluded that they are looking forwards to regulators' approval of option 2, but, predictably, until that day arrives, the financial services provider itself recommends option 3. For the time being, we recommend professionally managed private placements because the investment landscape is still maturing. Take precautions. According to the bank's analysts, crypto users are rapidly growing globally from a low base, and crypto assets appear to be approaching a hyper-adoption phase similar to that experienced by online businesses in the mid to late 1990s. The authors believe Bitcoin is on a similar path to the dot-com bull market and subsequent bubble burst of the 1990s. Crypto adoption rates appear to be following in the footsteps of other previously advanced technologies, such as the Internet. According to Wells Fargo Investment Institute, if this trend continues, cryptocurrency could soon exit the early adoption phase and enter an inflection point of hyper-adoption. For the reasons stated previously, the authors warn crypto investors to be cautious and remember the lessons of the 1990s, as picking long-term technology winners is no walk in the park. As many a dot-com company and investor can attest from 20 years ago, early-stage investing is often fraught with violent boom and bust cycles. Today, there are over 16,000 cryptocurrencies, and if history is any guide, many will fail, or at least fail to scale, the analysis concludes. Bitfinex hackers arrested 6 years later for stolen $60 million from crypto exchange. The couple responsible for Bitfinex's 2016 hack have been apprehended. Hacks on cryptocurrency exchanges are almost as old as the exchanges themselves. As long as there are gaps in an exchange's defenses to exploit, bad actors will profit from those flaws. Some hacks result in massive losses, while others result in minor losses. The Bitfinex hack of 2016 was far from minor. Hackers stole $60 million in assets. That stolen bag is now worth billions of dollars, 6 years after the hacking occurred. And many cryptocurrency investors thought the hackers got away with it. A pair of arrests made today, on the other hand, indicate otherwise. Bitfinex, founded in Hong Kong in 2012, is one of the older cryptocurrency exchanges. It was created by iFinex Incorporated, the same company that created the Tether stablecoin, USDT. Today, the exchange is known as one of the largest platforms for trading digital assets. Bitfinex is the world's 8th largest exchange by trading volume, with approximately $1 billion in assets traded each day. In 2016, the exchange was robbed by 2 hackers who stole $60 million in Bitcoin, BTC. 6 years later, the bag's worth has risen to $4.5 billion. Authorities have been on a wild goose chase since then, attempting to locate the stolen assets. Fortunately for them, the chase appears to be winding down. Hackers caught laundering Bitcoin on Bitfinex. Bitfinex has the last laugh today. The United States Department of Justice has made 2 arrests in connection with the platform hack, and the hackers face a slew of charges. Today, 2 New York City residents, Ilya Lichtenstein and Heather Morgan, were arrested in connection with the 2016 hack. The couple is scheduled to appear in court for the first time this afternoon, the first of many court appearances. Last week, the situation in the case began to heat up significantly. Authorities admitted to closely monitoring the assets' movements. They were able to seize $3.5 billion in Bitcoin through this tracking, which was spread across 23 different transactions. The couple is now at the mercy of the justice system, and they must prove their innocence in the face of a long list of complaints from the Justice Department. The body primarily accuses the couple of attempting to launder stolen funds and defraud the U.S. It accuses Lichtenstein and Morgan, in particular, of opening accounts with false identities and automating transactions. It also accuses the pair of chain hopping and transferring the stolen funds to multiple accounts and exchanges. The announcement represents a significant victory for American law enforcement. It demonstrates that they are legitimately capable of tracking stolen funds, even in the face of anti-money laundering measures. The arrest has far-reaching implications for incoming crypto trading and reporting regulations. Ireland declares that retail funds will not be available for the crypto market. The Central Bank of Ireland has stated that retail investment funds will most likely not be allowed to gain direct or indirect exposure to cryptocurrencies. The bank's stance is motivated by the risks in the cryptocurrency market. The bank, on the other hand, believes that cryptocurrency is best suited for wholesale or professional investors who can properly assess the risk of the crypto market. Ireland has long been welcoming to the crypto industry, and it is one of the countries where Binance, the world's largest crypto exchange, intends to establish a headquarters. According to Ireland's central bank, cryptocurrency exposure is not yet appropriate for retail investors. The Central Bank of Ireland's second annual Securities Markets Risk Outlook report included a statement on the retail status of cryptocurrency. The bank stated in the report that it has received numerous inquiries regarding whether undertakings for collective investment in transferable securities, UCITS, or authorized investment funds, AIFs, investment vehicles marketed to retail investors, can gain exposure to crypto assets. According to the bank, at this time, the risks inherent in the cryptocurrency market would preclude such funds from gaining direct or indirect exposure to cryptocurrency. At the moment, while such assets may be suitable for wholesale or professional investors, the report stated, the central bank is highly unlikely to approve a UCITS or a retail investor AIF proposing any exposure, direct or indirect, to crypto assets. The reasons for the stance include specific risks associated with crypto assets and the possibility that appropriate risk assessment may be difficult for non-professional investors to undertake. Ireland is still willing to help the crypto industry by providing clarity. Ireland has been one of the countries with the most open policies towards cryptocurrency. The bank stated in the report that the industry's main limitation remains that cryptocurrencies are largely unregulated. It does, however, acknowledge that crypto assets are one of the country's fastest growing innovations in the securities market. Notably, Ireland is being considered as a location for one of several headquarters by Binance, the world's largest cryptocurrency exchange by trading volume. Binance has already registered 4 corporate entities in the country, according to a report by the Irish Independent, a local news outlet. Wells Fargo, a banking behemoth, is bullish on Bitcoin, predicting that crypto adoption will skyrocket. Wells Fargo believes that crypto has risen from virtually nothing, and that adoption is nearing a tipping point. The banking behemoth claims that Bitcoin is in the same stage as the internet was in the mid to late 1990s. Wells Fargo believes that it is not too late to purchase Bitcoin. Wells Fargo, a multinational financial services conglomerate, has a bullish outlook on cryptocurrency. The banking giant's global investment strategy team believes that Bitcoin's annualized gains of more than 200% do not indicate that it is too late to invest in the cryptocurrency. Wells Fargo sees parallels between the early days of the internet and the rise of cryptocurrencies today. According to the report, we understand the too late to invest argument, but we disagree. Bitcoin may soon exit the early adoption phase and reach a point of hyper-adoption. According to Wells Fargo, Bitcoin is a digital invention with current infrastructure that has the potential for rapid adoption. Through private placement, institutional investors have joined the race to acquire Bitcoin and gain exposure to the cryptocurrency. According to the bank's analysts, the steep Bitcoin adoption curve is fueled by regulatory clarity and institutional adoption. The banking behemoth claims that buying Bitcoin directly from an exchange requires complex technology. According to the report, we anticipate that cryptocurrencies, like recent digital inventions, will eventually follow an accelerated adoption path. Bitcoin adoption has been steadily increasing over the last month. According to analysts, recent events and rising institutional capital inflows are fueling a bullish narrative for the Bitcoin price. At Crypto, Sultan21, a crypto analyst and trader, believes Bitcoin has set its sights on the $47,000 mark. According to FX Street analysts, Bitcoin's price target is $50,000. Police in Spain apprehend a narco-trafficking ring that was using cryptocurrency to launder money. On Monday, Spanish authorities announced the arrest of 7 people suspected of being members of a criminal network that trafficked cocaine and then used cryptocurrency to launder the proceeds. More than 20 vehicles, 2 motorcycles, €200,000, $228,000 in cash, 20 kilos of cocaine, and links to cryptocurrency accounts were seized as part of Operation Grand Tragadera. Several companies in Seville and Cadiz were also searched for possible links to the criminal network. At the start of the year, the national police were made aware of a sophisticated large-scale drug trafficking network. The criminal organization is thought to be linked to a network of businesses in Seville, including a car repair shop, that were used to launder money earned from drug sales and invest some of the profit in cryptocurrency. Investigators discovered elaborate hidden compartments in vehicles using hydraulic openers to conceal weapons and drugs in a video released by the National Police. The use of cryptocurrencies in criminal activities has recently grown in popularity. In a separate incident, Spanish National Police investigators raided what was discovered to be an illegal cryptocurrency mining farm in the province of Seville less than 2 weeks prior. According to a statement released on January 28, investigators thought the location was a possible marijuana grow-up but instead discovered a series of Bitcoin mining servers. The National Police Department also released a video depicting the size of the cryptocurrency farm. The discovery is Seville's first known illegal cryptocurrency mining farm. The Bitcoin mined from the illegal farm is worth €31,500, $35,954, while the mining equipment is worth €13,000, $14,838. National Police investigators have not publicly announced any direct links between the two raids. Both investigations are still going on. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.